Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down a wild day in the markets. We've got a lot to cover, from a massive rally fueled by geopolitical optimism to some standout movers in tech and energy, plus a peek at what's coming up with earnings. So let's dive right in and make sense of today's action for your long-term investment game plan. First up, the major indexes put on a show today with a strong rebound that's got everyone talking. The S&P 500 climbed nearly 1%, pushing closer to its 200-day moving average, while the Nasdaq led the charge with a solid gain of over 1%. The Dow wasn't far behind, jumping around 0.5%. What's driving this? A wave of optimism around a potential de-escalation in the Iran conflict, with signals from the Trump administration suggesting a resolution could be near. For us long-term investors, this kind of bounce is a reminder to stay focused on the bigger picture. Geopolitical noise can swing markets short-term, but fundamentals still rule the roost. Speaking of geopolitics, the ongoing situation with Iran continues to ripple through global markets. While hopes for peace are lifting stocks, oil prices remain stubbornly high despite dipping slightly below $100 a barrel. Analysts are pointing out that even if tensions ease, the energy supply shock could linger, impacting inflation and growth. On the flip side, some research suggests this slowdown in demand might actually help cool inflationary pressures over time, potentially extending the economic cycle. For us, this is a cue to keep an eye on energy exposure in our portfolios. Volatility here isn't going away overnight. Now, let's zoom in on the day's big winners among large-cap stocks. Tech was the star of the show, with Micron Technology and Intel both surging around 9 cents, a clear sign that investors are betting on a rebound in semiconductor demand, likely tied to AI and data center growth. Western Digital also made waves, up over 10%, showing strength in storage solutions. These moves highlight a short-term rotation back into tech, but for long-term players, it's about identifying whether these gains are backed by sustainable earnings growth or just market momentum. On the flip side, energy giants took a hit today as oil prices softened. ExxonMobil and Chevron dropped around 5% and 4.5% respectively, reflecting the market's reaction to easing Middle East tensions. Nike also had a rough day, plummeting over 15% after a disappointing sales outlook spooked investors. While these dips sting in the short term, they could spell opportunity for us long-term folks, especially in energy, where fundamentals like global demand aren't disappearing, and in consumer discretionary, where a brand like Nike might just be undervalued on a pullback. Looking at the market movers, Nvidia continues to dominate attention with high trading volume, though it only edged up slightly today. Amazon and Tesla also saw active trading, with Tesla gaining a bit over 2% ahead of its Q1 sales data release. Alphabet wasn't far behind, climbing more than 3% as growth stocks caught a bid. These names are often the pulse of the market, and for long-term investors, they're a reminder to balance exposure to megacaps with diversification. Don't let the hype of a single stock derail your strategy. Diving deeper into the most active stocks by volume, we see some familiar faces like Nvidia and Micron again, alongside Intel, showing just how much interest there is in tech right now. Petrobras, however, saw heavy trading with a slight dip, likely tied to the oil price narrative. Snap also popped up with a nice gain, suggesting some speculative interest in social media plays. Volume spikes like these can signal short-term momentum, but for us, they're more of a heads-up to dig into the why behind the trades. Shifting gears to earnings, we've got a busy week ahead with some notable names reporting. Keep an eye on Nike, which is already in the spotlight after today's drop. Analysts are expecting a tough road ahead, so their report could set the tone for consumer discretionary. Lamb Weston also reported recently, beating expectations despite margin pressures, showing resilience in food services. Conagra Brands is another to watch, as consumer staples could offer stability amid market swings. For long-term investors, earnings season is where we separate the wheat from the chaff. Look for companies with consistent execution over flashy one-off beats. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and make informed decisions for your portfolio. Over the past week, some large-cap stocks have really stood out. Garmin soared over 21%, showing strength in consumer tech, while AppLovin and Shopify both gained around 14 to 15%, riding the digital economy wave. Occidental Petroleum also jumped over 14%, a standout in energy despite today's pullback. These weekly movers can hint at emerging trends. Think about whether these sectors align with your long-term thesis or if they're just riding a temporary tailwind. On the other end, the past week wasn't kind to everyone. Genuine Parts dropped over 20%, signaling weakness in auto retail, while Rivian fell 14% amid ongoing EV market concerns. Okta and Atlassian also took hits of around 12 to 13%, reflecting pressure on software-as-a-service names. For us, these declines are a chance to reassess. Could they be buying opportunities if the fundamentals hold up, or are they warning signs of deeper issues? Sector-wise, industrials led the pack over the past week with a 2% gain, followed by consumer cyclical stocks up over 1.5%. Energy, despite today's dip, was up more than 4% for the week, showing how geopolitical narratives are still propping up the sector. These short-term sector moves can inform our long-term allocations. Industrials and energy might offer stability if global growth holds, but don't chase the hot hand without a plan. Meanwhile, healthcare lagged behind, down a bit over 0.5% for the week, with utilities and financials also in the red, though only slightly. These underperformers might be feeling the pinch from macro uncertainty, but for long-term investors, they could represent value if you believe in a reversion to the mean. Healthcare, especially, often weathers storms well over time. Wrapping up the broader market view, the S&P 500's rally today is a bright spot after a rough first quarter. Analysts are split. Some call this a dead cat bounce driven by short covering, while others see it as the start of a recovery if peace talks progress. For us long-term players, it's about staying disciplined. Use rallies like this to rebalance, not to chase, and keep your risk tolerance in check. Similarly, the Nasdaq's strength today, led by tech, underscores the AI and innovation narrative that's been a key driver for months. But remember, valuations in this space are still lofty compared to historical averages. As long-term investors, we need to weigh growth potential against the risk of a pullback if sentiment shifts. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate your investment journey. Be sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on specific stocks and sectors. Hit that like button, subscribe, and we'll see you tomorrow for more market action. Take care and invest smart.